Hey guys, and welcome back to the ASX Investor channel. Today we'll be diving into the world of uranium with a very special uranium panel discussion. We've got a number of experts from the uranium field. We'll be talking about the industry at large, the supply and demand dynamics, everything unfolding in a regulatory landscape, as well as a sentiment towards the sector. And of course, we'll talk about the potential opportunities that could open up with the uranium bull market. We're excited to introduce to you all Guy Keller from Tribeca Investment Partners, who's a renowned commodities investor with over 20 plus years experience in the field. We also have the CEO and Managing Director of Alligator Energy, Greg Hall, and the CEO and Managing Director of Lotus Resources. Welcoming back to the channel, Keith Bowes.
Welcome to the channel and enjoy.
Before we dive into the uranium discussion itself, it'd be great to have a bit of an introduction to each of you. Maybe Guy, if you can kickstart us off, and then Greg and Keith also provide a little bit about who you are and the companies as well.
Sure. So I work for Tribeca Investment Partners, based here in Australia. We're a boutique fund manager. More directly, I work for our global natural resources business, which is a global investor across all natural resources that's been around for about 7 or 8 years. About 4 years ago, in response to doing some work in the uranium space and realising what an opportunity it was, we spun out the nuclear energy opportunities strategy, which I headed up. And after a few years of people telling us we were crazy, things finally kicked off in 2020. And we're at the beginning of that sort of journey on the uranium thesis.
All right. Thanks, Guy. Greg Hall, CEO of Alligator. Alligator Energy is a longer-term exploration group for uranium, but only recently branched into acquisition of some development stage projects. One is an early stage development going through scoping and initial resource upgrade now. Others are exploration projects in uranium. We are a big believer in the thematic. Myself and many members of our team have had a long background in the industry through decades. So we've seen the market in uranium move before and be stopped by various events. But this seems like it's got a lot more legs, in particular with some of the recent policy shifts, as Guy referred to, from 2020 on, which I'm sure we're going to discuss today. So we're advancing our Samphire Uranium project and looking forward to the market continuing to improve.
Thanks, Greg. And so my name's Keith Bowes and I'm the Managing Director for Lotus Resources. Lotus Resources, ASX listed company that acquired the Alligator uranium asset from Paladin Energy back in early 2020. The asset is a past producer, operated between 2009 and 2014, has been on care and maintenance since then, and we've maintained that current care and maintenance status. But we have been doing a lot of development work, let's say, during the last 2 years or so, looking at some ways to try and optimize the process such that we can bring the asset back online again. We have a feasibility study that we're currently working on, and that feasibility study should be announced to the market within the next couple of weeks.
Perfect. Appreciate that. And it's great to hear the overview. Exciting as well that the feasibility study is inbound there, Keith. We'd love just to start at the start. Maybe you get that discussion of the state of play itself, get that understanding, Guy. If you can provide a bit of an insight into how you're currently perceiving the uranium sector, the lens that you're looking at it from, and then Greg and Keith, maybe from internally within your companies, how you're thinking about the changes and everything else that's been evolving in the landscape.
Yeah, thanks. Look, quite simply, the uranium sector has been beaten up in the last 6 to 8 weeks, but it's not alone. As we're aware, every market sector, there's not been anywhere to hide. The difference is when I try to look through this noise, and it is noise. I mean, there's a lot of things that aren't making sense. Sell everything without any sort of consequence or thought to what's happening, just to stop the bleeding. But, when we look at all of the resources as part of my other hat, uranium has got by far the tightest fundamental story going in any commodity. You have to remember as well is that whilst we can talk about, recession and what that's going to do to the demand side of other commodities, it doesn't work the same for uranium. The uranium being burnt in reactors today is uranium that was bought probably 3 or 4 years ago. And so, you know, that demand does not fall off a cliff in this sector like you could point to and say copper or iron ore. So, you know, looking through that, we went into this with a really tight fundamental scenario where there's not enough uranium being mined now, or in fact, for the last sort of 8 to 10 years, to fuel the current reactor fleet. So you've already got a primary mine supply deficit. You've got the biggest reactor build program in decades that's going to add more demand in the next 5 years. That again, there's not enough uranium being mined, and you've had a massive inventory draw over the last sort of 8 to 10 years that's been filling that gap, which is not infinite. You know, you've obviously seen some spot proxies come in and soak up a whole bunch of pounds as well to accelerate that. So whilst it's a painful mark to market in the sector at the moment, it's a really small sector. And this is one thing we have to remember. You know, I think the whole market cap globally of the uranium mining sector would fit inside Fortescue quite easily, for example. And so when it does move, it's a really small door to get through. And, you know, unfortunately, that sort of means that you do need to wear some pain. You do need to be closing your eyes and trying to buy things you like when it looks like the world's ending, because, you know, in my view, this thesis does not go away. And the moment that sort of short-term noise stops, and especially, you know, we could probably talk about the EU vote last night with the green taxonomy and things like that, you know, probably later in the discussion. But there's a huge amount of policy, energy security, huge amount of things lining up here that the short-term market is ignoring and giving us some pretty extraordinary levels to add to our positions.
I think if I could just add to that, so I mean, agree completely there, Guy. I think that the thematics are still very strong for the commodity. I mean, the one thing that I always point to at the moment is if you look a year back or so back in August 2021, I mean, the uranium price was sitting, around $30, maybe $32 per pound. Today, we're sitting $52, $53 per pound. So from that perspective, the uranium price has actually responded pretty well, even though we have gone through what has been a very painful couple of weeks. There's no doubt about that. But I mean, electrification, zero carbon emissions, I mean, those are all strong messages that are coming out from various governments, from companies. Everyone's talking about it. And I mean, I think it's accepted now that the only real way we can get to those zero carbon emissions is with nuclear energy. And as guys mentioned, there is a huge number of new builds coming online. The current uranium supply can't even meet the current demand of the nuclear reactors. With all these new reactors on, new uranium has to come back in again. And there's other issues that we're also having to look at. I mean, the Ukrainian-Russian thing and what's going to happen with Russia and its enrichment and its conversion facilities and all that kind of stuff. How does that impact what's going to happen in the West as well? So an interesting time, I think, for uranium. I think a very positive time for uranium as well.
Thanks, Keith. Just to augment the discussion a little, the Ukrainian situation and the energy matter in Europe is really heightening a long-term factor that's been in the uranium market for a while. Back in the 80s and the early 90s, a megatons to megawatts program was established between the US and Russia, and that was to capture the excess weapons-grade material in Russia to avoid it, in particular, to avoid it falling into other hands, and to downblend it as power station grade uranium. So this was a major coup. And from 93 through to 2012, there was efforts to bring in and capture downblended enriched uranium product into the US market. It was managed by USEC, the forerunner of Centris, which then sold a lot of that material to US utilities. It was a major coup for the globe, a coup for the US, and of course it brought in US dollars for Russia. Now we're going through the phase now where with changing politics in the world, the US doesn't want to be beholden to Russian EUP imports. And it's almost 30% of nuclear power plants in the US have been using that material. So gradually, there won't be a sudden drop off, as Guy says. Nuclear power plants plan their refuelings many years ahead. But gradually, there'll be a shift from Russian EUP and supply material to Western EUP. And that's going to benefit Keith's and my projects and other Western projects. And that's certainly, already we're seeing that shift with particularly US utilities doing deals with companies like ours for long-term supply, conditional contracts or startup contracts. And recently we just saw Duke Power do a deal over a new enrichment technology. And the other change that Guy alluded to, this vote in the EU taxonomy for nuclear being declared a green energy supply, will mean there'll be cheaper and more finance available in Europe for new reactors. So there's a combination of all those energy changes that have gone on in the last few years, which means the long-term growth path is there. And so our projects and other companies like ours are getting set to fulfill that long-term growth path.
And it's fascinating as well. We know the macroeconomic environment. Everybody's seen, we've had the inflation discussion. It's slowly starting to transition as well into that more growth slowdown focus, recession fears. We all know that there's a lot of discussions about what happens to demand for commodities. I think Guy mentioned it there as well during a recession, but obviously uranium's got more defensive qualities for a range of different reasons, the lower levels of price elasticity. And ultimately it's much more of a supply side story than the demand side story. I'd love to just ask, how do you think uranium does fare in that recessionary environment, and the lens that perhaps newer investors who are not as familiar with the sector should look at it through?
I'll make an initial comment. When you get, if we get into a recessionary situation or cash pulls out of the equity markets, then we get an impact like any equity companies. You need to raise cash, you need to advance projects. You do that, your market cap could fall. But nonetheless, if you're on the path where you've got a commodity whose price is moving up, and as Keith said, the long-term price is around 50 and still increasing, then you're still on a path with your business. So we'll all be moving on that path no matter what the short-term thematic in the economy is. It just means that you've got to be more circumspect about when and where you raise cash and how you do it.
I think in some way, perhaps the uranium industry has been a little bit of a victim of its own success as well. There's always law and a way in terms of perhaps pre-sput and post-sput as being the two areas or regions that you have a look at. And I think prior to sput coming into the market in August last year, I think the uranium market was perhaps a little bit on the side, running on its own fundamentals and all that kind of stuff. But certainly with this broader base of companies or financiers and traders and everything coming in and buying it up, I think it has been dragged into more of a general commodity and is perhaps then exposed to more of the vagaries of the market than perhaps what it was previously, which I think is a good thing in the long term. I think it's a good thing that it starts to perhaps obey or at least follow some of the other commodities. But of course, in the current inflationary and recessionary issues, obviously we're getting dragged down like the rest of the commodities, unfortunately.
Yeah, I tend to agree with Keith. I mean, the Sprott Physical Trust was a good thing and maybe, not such a good thing because it accelerated the focus on uranium. Prior to this job, I spent 20 odd years trading in physical commodity markets. And so I know some pretty illiquid markets, but the state of the physical spot uranium market has certainly had me gasping and with a surprise as to how inefficient it was. So, it certainly has made that price discovery much more efficient, but also part of the issue is that it's drawn attention to a market that effectively is the last resort. It's the clearing mechanism of surplus pounds. You've got to look back to say iron ore back in the early 2000s, where 95% of iron ore was traded on contract pricing, and that spot market was just a clearing mechanism until BHP and then Chinese steel mills move that towards a more shorter-term pricing mechanism. That's the uranium market. Back then in 2007 and 8, no one talked about the spot iron ore price. It was all about the one-year contract price for BHP to Japan. So it has sort of, in a bad way, probably put attention on what's a very small part of the nuclear fuel cycle pricing mechanism. But for retail investors, for generalist investors, it's actually pretty hard to go and find any price discovery because of the way the market is set up. So, if you, for lack of anything, it's not great, but at least there's some idea that the prices is moving in the right direction.
And just to make a comment on that, Guy, you're right in that mechanism moved in iron ore. It's more difficult to see uranium moving in the same way to a dominant spot because the demand side, the nuclear utilities, don't necessarily want that. Because uranium, as you know, and we've talked about this before, as you know, that the fuel cost, particularly uranium cost of a nuclear power plant and the enrichment is a minor, it's a small part of the overall cost base. They would much prefer lock in 8-year supply or between 4 to 10 year supply and pay a slight premium rather than just go to the vagaries of the spot market. And so the demand side still wants that long-term basis. So I agree with Guy that the focus recently has been on the spot market, but we're now seeing it shift a little bit subtly as these newer contracts come in back to the long-term market. And that long-term price still has to move somewhat. For projects like ours, we will need a higher price than a straight $50 a pound. So that market will still need to move to get the investment into the industry.
I guess while we're discussing the restart price and the incentive price itself, as you mentioned, initially it was for potentially a $60 a pound. It's now looking more like a $70 to $75 per pound price. When you're thinking about that pathway towards production, Keith and Greg, what are you looking for on that pathway towards it? And then Guy, maybe if you can give a bit of an insight into, from an investment lens, when looking at the developers, what are some of those key factors to consider?
I think from our perspective, when you look at Lotus, I mean, we do recognize that when Alligator was operating previously, one of the reasons why it actually shut down back in 2014 was the majority of the material at that point in time was actually sold into the spot market. The spot price crashed, obviously, after Fukushima, got lower than what their cash operating costs were, and that's really the fundamental reason why Alligator shut down at that point in time. I don't think we want to go down that route. I don't think we want to expose ourselves to the same risks. We're certainly looking, as Greg has said, there does seem to be more of a focus or discussion from the various utilities about term contracts. We certainly want to enter into term contracts. We're looking at that as a requirement prior to our restart. I think the question we're trying to look at now is that how much of our production do we want to put into term contracts? We obviously would like to leave some of our production to go into the spot market. I still think that there's significant upside to the spot market going forward, and we'd certainly want to have some exposure to that potential increase. But we, at the same time, we want to protect our bottom line as well. So we're thinking sort of along the lines that we'll put in as much material as required into term contracts to make sure that all of our cash costs are covered, and then we'll leave the remaining production to go into either the spot market or potentially into shorter or medium-term contracts where maybe we can catch some upside on it as well. So I think that's important, but it's also, and I'm not too sure how much your audience is aware of it, but the pricing mechanisms behind term contracts are really quite interesting at the moment as well. It's certainly not going back to the traditional base escalated price or fixed price or anything like that. The utilities are certainly prepared to include in their pricing mechanism formulas that provide some exposure to either the long-term price or the short or the spot price as quoted by UXC and TradeTech as well. So I think we need to take that into account as well when we start looking at our pricing stuff.
I fully agree with Keith. As a potential producer going forward, even at an early stage, you need to have an underpinning of your cost base. And so while we're only putting out our first public costs this year, it's probably likely next year, as we're into a field lease trial, that we'll start to evaluate initial contracts to start to cover that cost base. And it is a discussion point that a board with advice has to make on how much do you underpin with a cost base going forward. But I agree, you want to keep some upside as well. The pricing mechanisms Keith referred to are valuable because what you can do within a contract is have a proportion of fixed price, a proportion of market escalated. Usually they're captured by a floor and ceiling, but nonetheless, it does give you some exposure to the upside. And there's other mechanisms I've seen in contracts. For example, even with a base price, you can have a reset after 2 years to like halfway towards where the spot is, just to get some mechanism in there. But it's very important that investors understand that the spot price of the day, once a company starts putting in longer term contracts, the spot price of the day does not have the same impact to the revenue stream. It's all underpinned by the contracts that you put in place. So that's an important point for investors to understand.
Yeah, look, I mean, there's no doubt that the incentive price is higher. You know, if it was consensus was $60, then it's certainly higher now. We've seen cost inflation come through in every commodity producer, regardless of the commodity globally, because of a whole range of factors, whether it's labour shortages, whether it's supply chain issues, whether it's long lead times. So the incentive price is higher. You know, at $75, almost every uranium CEO is going to be telling you that they can come to market at that price. I continue to argue that it's not just the price, and as these guys have said, you know, it's what's the appetite for your product that's going to allow you to find the money to go and restart or develop your project. You know, so we're looking at that. How much money is required? Where's it coming from? And you know, what's the guarantee in a contract that product is going to be sold to be able to pay back that debt, so that the poor old equity holder like myself is not getting left with the can. The other really important thing with uranium is that, you know, it's hard to get any project up in any commodity in this current environment. And it has been hard for a number of years because there's so much more opposition to any mining project. You insert uranium into that, it becomes even harder. So jurisdiction is extraordinarily important. Community engagement is more important as well, because you know, you might get to $75 price, you lock in some really attractive contracts, and as a result of that, you get some favourable debt terms to go and start your project. If you don't have government support, community support, regulatory support, you're not going anywhere. You know, so that's something that we look at, and very much so. You know, and that's even before you look at management team and ore body, because you know, if you don't have a good ore body, you're not getting anything out of the ground, and if you don't have a team that's able to then get that ore body to market, you've got the same problem. So you know, there's a whole bunch of other things we look at, our checklist, that are more than just the incentive price, and that's important, because I think when the price gets to a certain point, there's some aspects of the investment market who go, oh wow, there's going to be this wave of supply now, so I need to go and sell all my stocks. That's, you know, one, it's ridiculous to the points I've just made, and two, even if half of them come to market, it's still pounds that are needed because we've still got a deficit. So, you know, we actually need a whole bunch of these restart projects and greenfield projects to come to market to satisfy the demand that we're seeing.
And you've touched on it there, Guy. It's about the regulatory landscape as well. I'd love just to ask you guys, what are you seeing in terms of the sentiment towards nuclear more broadly, but also some of those key regulatory catalysts that you've seen over this past period, and how you think it really helps the sector continue to evolve?
Yeah, well, I might just add in there. Very good comments from Guy, because investors are looking at a range of things within a project or a company going forward. And you need to ascertain all of those aspects of your own projects to take them forward. And usually you do it before you even acquire them. So you target areas where you know you've got a regulatory regime, a supportive government generally, and you've got the horsepower behind it to make it work. Both Keith and I are in regimes where production has occurred, is occurring, or has occurred before. So we're comfortable with our regulatory regime. But because it can still take 3 to 4 to 5 years to get a uranium project approved. Keith's is ready to go. Ours we're commencing the approval process now. So you've got to be aware of that. The community engagement and engagement with the industries around you is absolutely paramount. The sign behind me is there for a reason. It's our first slide in all our presentations. It's about who we engage with and how we engage and what we do. So we've had Indigenous employees at our projects for many years. We're continuing to do that. We're ramping that up again now at our existing projects. Yeah, Guy is right. Investors who will come into this project will look at the raft of projects available and make a judgment and say, who has got the area, the jurisdiction, the regime, the horsepower, and the support to go forward. So it is an area that Keith does, I'm sure, and I do a massive amount of work behind the scenes.
Yeah, Greg, I mean, I agree with you 100%. I mean, the community engagement is absolutely critical. I think maybe just looking at a broader level, I think there has amongst the public been more acceptance of uranium probably over the last year or two. We certainly don't see the demonstrations that used to occur maybe 5 or 10 years ago. Those certainly don't seem to be around anymore. So I think from the general public, there's a lot more acceptance about uranium. I mean, we know where we are in the northern part of Malawi. I mean, we're dealing with our local communities. We're dealing with our chiefs of the villages, our paramount chief. We're dealing with the NGOs. We're dealing with various businesses and services within the area. And the only question they ask me normally is, when are you guys starting up? That's all they want to know is, when are we going to start up? Because I suppose fortunately for them, they've seen the benefit of the mine operating previously. I mean, they always tell me how prosperous the Karonga region where Kalakeara sits was when the mine was operating previously. And they're looking forward to those times again. They want the mine back up and running. They know. I mean, to try and quote some numbers, I think when Kalakeara was operating previously, it was $340 million worth of expenditure was done nationally within Malawi. I mean, that's a huge amount of money for a relatively small country like Malawi to receive. So, yeah, absolutely critical that we maintain those things. And I know I'm talking about the business side of it, but there's also the social side of it as well, in terms of, being a good corporate citizen or being a good, environmental citizen, in terms of making sure we do all the things and all that kind of stuff. And that's been a huge focus for us over the last couple of years as well.
And just when you sort of look more broadly on regulatory with global governments, I mean, we can sort of get a little bit lost in Australia here on the basis of, there's no bipartisan support yet to overturn what was a ridiculous law that was made all those years ago. But, I sort of sit there and say, Australia's sort of irrelevant in that. What Australia needs to actually do is agree at a state level with probably some federal leadership that exploration and extraction of uranium should be allowed, because in 2 states in particular, it's not actually legislation, it's just the sitting government's policy of the day. And I guarantee you the residents of Queensland and Western Australia probably don't know or don't care that's a government policy. But when you look more broadly to the world, I mean, the US, the Democratic administration there, it's the first Democratic administration that's been publicly supportive of nuclear power. They're doing all sorts of things with, a $6 billion fund to allow nuclear to compete with the subsidisation and set up that renewables have had to dominate the grid, in also an environment where low gas prices have been made nuclear difficult. But the administration there has realised that 20% of their grid is 55% of their carbon avoidance, and they've built it already. They don't have to, they've got the fleet. Let's keep it. Let's extend it. Finland, the first green government to publicly come out in support of nuclear policies, which has got every other Green party looking at it saying, "Wow." California now, pivoting back to the States, saying maybe we should keep Diablo Canyon open, because as well as producing carbon-free electricity, we can solve one of our other problems by putting a desalination plant in and having a bit more fresh water in the state. And maybe then we can also do some hydrogen through electrolysis there. Wow. EU with the green taxonomy, investing in new nuclear technology now is going to be open up. There's a pool of investment money EU green that's now going to be available, as well as lower rates because it's green investment. France is looking to, it was 2 years ago they were going to bring their nuclear share from 70% to 50%. They reversed that back to 70, and now they're looking to build a whole bunch of new mega reactors. Belgium, who was going to shut things down in 3 weeks on energy security, reversed that policy. So you've got a huge shift in government support that was already moving the way of nuclear on a decarbonisation, electrification theme, that now, as a result of the tragic actions in the Ukraine, have caused all of these governments to focus on energy security. So those nuclear haves are saying, we don't want it to go backwards, we want to keep and maybe expand. And the nuclear have-nots are saying, how do we get involved in this? And again, I haven't even touched on Korea, Japan, China. I mean, you name it, there's countries now where governments have made a structural policy shift towards supporting nuclear. And we tend to lose that here in Australia because we say, oh, nuclear is illegal, blah, blah, blah. But, everywhere it matters, it's moving in the right direction.
A range of really good points there. I'd love just to hear, Greg or Keith, if you had anything to add on that. Obviously, we know that the energy crisis is growing, the focus on security of supply chains, as well as the decarbonisation trend. Did you have anything to add on top of what Guy shared there?
I think Guy covered it well. He's absolutely correct. There's a range of governments. If you hear insiders from the IAEA, the National Atomic Energy Agency, talking, they are flat out responding to queries from countries that wish to get into either uranium mining or nuclear power. So they have a series of groups set up that go out to a country to help them understand the basis of how they have to start the regulatory regime for potential nuclear power, the skill sets, the safeguards treaties, all of those things. And those people are flat out. They have very little time. They're still getting inspections. That's a different division, but their new industry group is just super busy. So fully support that. The other point about Australia is while we don't have the ability to have nuclear power here, it's a law which was established back in the 70s. There is now a subtle shift with AUKUS, and in fact the IAEA was here this week talking about safeguards to do with the monitoring and management of power plants in vessels. The legislation federally will have to change to allow them to be monitored and managed within Australian ports. It will be very interesting to see between federal governments and agencies how that discussion goes, and to see whether that will be restricted or whether it will be moved to allow civilian nuclear reactors under the same legislation. That is going to be a very strong point of discussion, I believe, in the next 2 years or more.
I think maybe just one other topic that I think is also quite interesting at the moment is these small modular reactors as well that are also sitting on the sideline. I think the potential for them to be a significant growth area in nuclear power in the future is really, really strong. I mean, they're talking now about perhaps having some of the first SMRs coming online in 2027, 2028. And if you look around and you read the news and all that, there must be, I don't know what it is, 30, 40, maybe even 50 companies at the moment that are all trying to, looking at SMRs and looking at developing SMRs as well. So I think there's a relatively high level of confidence that at some time in the future, the SMR technology is going to become significant. And I think if you have a look at some of the future supply and demand curves that have been put out by, like the WNA and all that kind of stuff, at least I know in the report they put out last year, even the SMR requirements weren't included in that. I think they're going to make their first attempt this year to try and make an estimate of what those potentially could be. But I mean, that's another significant growth area that may get over some of the hurdles that some people have about nuclear reactors being so expensive. So that'll be a real interesting area to watch, I think, as well.
Actually, Keith, a good point about that is watch this space with the EU taxonomy now passed and Poland signing an agreement with NuScale for an SMR. I bet you they'll be one of the first cabs off the rank to look for finance for that. Yeah. That'll be a little interesting to see how that works.
Very interesting, yes.
So the SMR feeds in, I guess, a little bit in terms of the sentiment piece itself. Do you think there are any other hurdles in terms of the broader societal acceptance of nuclear, or what would we need to see it go more mainstream, so to speak?
I think probably maybe one question that still hasn't been completely answered is waste disposal. I think that's still something that's out there. I do think, and that some stuff I read, I think it was a few weeks ago, they were saying, I think it was Finland had recently signed off on a long-term disposal facility. I think that's probably one area that needs to get some more attention. And I think that's probably some areas that people still have some concerns about.
Yeah, Finland and Sweden combined forces some years ago. They were both doing nuclear waste repository, permanent repository research. They combined forces. They elected to put the first one in Finland, and that's now operational as it's officially opened. And now they're planning the loading of fuel there. And that's you're right, Keith. That's always been a bone of contention. The US through Nevada. In Nevada, tried for 20 years to get a permanent repository, and the restrictions placed on it were so horrendous that they just gave up. And essentially, you've got nuclear fuel in casks, concrete lined casks at the nuclear reactors. Now, it's perfectly safe there. You can camp next to one of those casks for most of your life and you don't get any impact. But the point about it is a struggle for the industry, because the 1970s thinking of we got to bury this, bury it deep, don't touch it ever again, needs to change. It's starting to change. People see this as a future resource. Most once through nuclear fuel has only used anywhere between 2 and 5% of the power out of it. You can reprocess it, not as a uranium miner, I want to see that happen too quick, but nonetheless, there will be efficient ways developed in the future to reprocess and utilise more power. So it's a future source of power which we shouldn't ignore, and governments gradually are listening to the science about that. It is safe to store. You can store it on the surface if you wish. You can have it accessible for the future. And so that changing mentality, it'll take longer to change that mentality than it will for nuclear power, but nonetheless, there is some shifting going on.
Yeah, I mean, I don't worry so much about nuclear waste. The reality is the French reprocess 70% of their waste to reuse again in their reactors. So, and that was something that was put in place when they built those reactors. So it was funded for, they built the facilities and what have you. The only reason the rest of the world has not been doing that is because, to Greg's earlier point, there was a megatons to megawatt project that fulfilled the supply deficit, and there was cheap pounds that you could dig out of the ground for $20. So, the reason I think some of these governments are not rushing to bury it underground is because it still has an energy value and therefore a commercial value. And it will, it will be required. In all the years of civilian nuclear fleets, I think there's something like 200,000 tonnes of high-level nuclear waste. Put that in perspective, in the next 30 years of solar globally, there'll be something like 70 million tonnes of solar waste, which hasn't been funded for by the industry. So every reactor, when it's built and financed, there is a part of that money put aside to deal with the waste that reactor is going to generate through the life of the reactor and then some. None of these, it's the only industry in the world that's already provisioning financially for the waste. So I don't worry too much about that. And as I said, I think as small modular reactor technology starts to kick off, as we're talking before about enrichment reliance moving away from Russia and probably China, we will find that some of that starts to find its way back into reactors, because it will be needed.
And just thinking about that next phase of the cycle as well, obviously, as we work towards that higher incentive price, what do you think are some of those upcoming catalysts that potentially could help us to drive towards that, and what investors should be looking forward to over this next period?
Well, we're already seeing them. The market said we want to see utilities contracting. Guess what? Utilities are contracting, but we're just in the middle of this macro drawdown, so that's being ignored. Tell me the last time you had, multi-year contracts with a whole bunch of producers that aren't producing. Like 2011, it was the peak of the last cycle that was happening. Tell me the last time the Chinese were engaging in long-term contracting with anybody they did with the Kazakhs. That was 12 years ago at the peak of the cycle, they were contracting. So the catalysts that we want to see are happening. We've seen Cameco announce their restart of their tier one asset, because the demand's there. The Kazakh expansion pounds are tied up. We've seen some restart projects, brownfield care and maintenance projects sign, as well as some others sign some contracts that are not massively significant, but the utilities are moving. But they're talking to people that they've never spoken to or they've never engaged with before. They've probably spoken to them to say, hey, how you going? How's your project going? Where are you? They're now saying, we need it. We want to move forward. So the catalysts are there. It's just that the market sentiment is ignoring that. So, you'll wake up one day and see the whole sector's just gone boom and say, what happened? Oh, well, it's because of all those announcements from those US utilities. The next question is, who else do they talk to next? And this is the thing. There's a handful of others that they could talk to where that they'll get line of sight on the next few years. But then they're really reaching out for they'll be having to reach even further away. So it's already there, in my view. It's just the market hasn't responded to it yet.
Yeah, look, I agree with you, Guy, and that long-term contracting at all levels is occurring, both existing producers and near-term developers and others. The other thing that people shouldn't forget is, and you said this yourself before, that there isn't going to be this wave of producers come forward. It takes a lot to finance, to operate. You've got to have all the right mix of things. And the proof of that is when we had a real pickup in uranium price from 2005 through to 2011, you had really 4 mines start during that time, with a 5th, Husab, that came on a bit later, right? So this is not an easy industry to kick off mines. It's not an easy industry to start them. You've got a long approval process. You've got to be seen to be doing everything right. You're being measured in a global context of how you perform under safeguards and under radiation restrictions and under health management and under community engagement, and even your engagement with NGOs, in particular global NGOs. So in other words, it's an industry that requires a lot of expertise and time to get going. So if you have a boom from 2005 to 2011, you only had 4 to 5 mines start, it's still going to be tough. And Guy is right. You're seeing the signs now, which are putting the underpinning of potential future financing. It means you can raise some capital to get closer to your production goal, but there's still a lot of hurdles to happen. But there is plenty of horsepower and plenty of interest out there to support the industry now, and I think that's grown than compared to even 12 years ago. So we're extremely hopeful. There is good government support, in particular in South Australia and the Northern Territory in Australia, to advance projects, and that's primarily where we are. And I'm sure we're going to see it advance in other countries, such as where Keith is. We're already seeing it in Canada. And the US is always been a bit of a, you think the US takes a long time to get a project approved, but they surprise you when they get it done and they get it there. So there's enough markets to make this happen.
Sorry, just to interrupt there as well, just on Greg's point, looking back at history, you had a triple-digit uranium price back then, and you had a pipeline of some pretty big projects coming to market, as well as the Kazakhs expanding. So, and I think, in fact, there's one analyst who I won't name, who was in the market back then, who put out a research piece saying that there was 27 projects that would come to market, and I think 7 came. And we're sitting there with triple-digit uranium prices. Here we are, sort of late 40s, early 50s. We've got a better demand profile than we had back then. We've got a bigger reactor build program. We've got more government support, and we've had a 10-year inventory drawdown. And when you look at the big projects that are out there, there's really one, right? Like, NextGen's Arrow, which is later in this decade, is the biggest project out there. You've had a whole bunch of restart projects, with Boss Paladin announcing, Global Atomic announcing, Keith will be sort of not far away as well. But again, it's like there's no big projects out there. The Kazakh expansion pounds are tied up. So you've got to go and look to Greg's point, the US. What do you get out of there? 4 or 5 million pounds. You know, again, you don't have a MacArthur River sitting in the wings, waiting to come on. You don't have another Langer Heinrich waiting in the wings. So it's going to be, you know, and here we are sitting at $48 going, oh, maybe it gets to 60. You know, as I said, if you look back 10 years, we're at triple digits and we had some really big things coming to market.
I think maybe just some other points to think about from triggers going forward as well. I think specifically maybe in the Western world, if you look at some of those extension life extensions and all that kind of stuff, I think when you start to see those getting approved specifically in the US, I think that'll be positive sentiment to the market. I think perhaps when you see some of the new bills that they're talking about in the UK, in France and all that kind of stuff being approved and starting, I think those would also be really positive triggers. But again, as Guy's mentioned, you know, when you look at the current demand of the existing fleet, primary production is not even sufficient to be able to meet that. So all these new reactors coming online, that's definitely going to have to require new producers coming online to meet their demands as well.
It's been a fantastic discussion. I guess to bring us home, maybe Keith and then Greg, did you want to give investors the overview of where you guys are currently positioned in terms of a company lens, some of those upcoming catalysts and any other factors to consider? And then maybe Guy, if you can wrap us up in just a bit of a sector outlook and those key things that investors should look at moving forward.
Yeah, thanks. So as I said in the introduction, we're busy with our feasibility study at the moment. We're basically tying up all the numbers now, looking at what our costs are going to be. And we expect to be able to put out a feasibility study announcement to the market within the next couple of weeks. I think post that feasibility study coming out, I think the activities for the next 6 months are really going to focus around offtake. So we were able to attend the conference in Montreal a few weeks ago, met with a number of US utilities there. We also plan going across to the WNA conference in London in September of this year, with the opportunity to meet perhaps some of the European and Asian utilities as well, have a discussion with them. So a big focus on offtake. We'll also start our discussions around financing as well, whether that be some debt financing, whether it be equity, whether it be a combination, whether we look for some prepayments from some of the utilities or some of the traders are also options for us going forward. And as I've said in presentations previously, the idea is that we would look to make a final investment decision by the end of this year, assuming that we can get the contracts that we want and assuming that we can get the financing in place that we want as well. So, busy 6 months for Lotus going ahead.
Yeah, thanks, Keith. Within Alligator Energy, our primary project, Samphire Uranium Project, just south of Whyalla in South Australia, is we've had our first significant drilling program for 8 years on that. Those results are in. We've been going through the detailed data, reworking a lot of the historical holes that are there, because there is a global, a low cutoff, 100 ppm cutoff resource over the primary project of around 30 million pound. But we know the targeted future production from that at a higher cutoff of, say, 250 ppm is going to be smaller, but tighter. And so far, all the technical work we've done on the hydrogeology and pulling that together is looking good. The resource update on that is being done now. We'll have that out during, if not late July, then early August. ANSTO test work on the cores we pulled out of the ground. The leach work is underway, looking promising. And we have ion exchange test work. Pull that together in a scoping study, which we'll have towards the end of the third quarter. So that's the first basis of, yes, we've got an economic proposition here, and that we'll have that out to market. We have commenced the approval for retention lease and a field leach trial, which we'd run during the second half next year. And that is basically like a pilot plant for in-situ recovery. And that will then set the parameters we need for a 2024 feasibility study. And all through that time period, we'll be expanding the resource. We've picked up more ground. We've got better technologies looking at the paleochannel locations and getting that roll front mapping done in great detail in these paleochannels is paramount to targeting future production. So lots of work on those projects as well as our exploration.
Right. So, as I said, this is the tightest commodity fundamentals that we look at across every commodity globally. The story hasn't changed. In fact, the story just continues to get more supportive for nuclear. If you believe that the world is going to continue to progress towards decarbonisation, electrification, and now the added element of energy security, then nuclear power will continue to be supported in the countries that have it, and some countries will continue to expand it. That just continues to make the thesis even tighter. The sector has been completely obliterated with broader markets in the last 8 weeks. Stocks that were pricing a $70 uranium price are now pricing something like a $30 to $35 price. Nothing's changed with those companies. Nothing's changed with the thesis. The reality is, it is a small and volatile sector, and it will whip around. But, I ask myself, do I see the uranium price back in the 30s again? And the answer is no, I don't. You can never rule silly moves out, but in the longer term, I think this continues to move higher. I also think this is the beginning of a multi-decade trend, where as we progress through this decade, some of the things we've touched on before, you're getting a proven technology in a more dispatchable format, being small modular reactors, that will continue that demand trajectory in a way that nobody is modelling right now. Or maybe there's one or two of my peers that are, but you look back on that implementation and compare it to, say, battery electric vehicles 5 years ago. You could sort of have a guess at what that penetration was going to look like 5 years ago, but then government policy changed and suddenly that trajectory went warm and took off, and was supported to lithium prices and whatever else. So, you've got this great unknown where you can't really model the demand because it's it's going to be one of those things that just moves. Every project that I see coming to market is going to be required. So every time you see a restart project or a greenfields coming to market, it's needed pounds. It's not going to change materially that thesis. I think you'll see, as we've got a history of 10 years ago where we had a really good bull market. There will be a lot of other things come to the market that will be noisy and distracting, and there will be a few diamonds in the rough there. But stick to your knitting, stick to the things that would have continued to work in the last cycle had Fukushima not stopped development of most of those projects. You'll continue to see consolidation as well. One of the things in the last cycle as well was, many companies got gobbled up by other companies. Other players came in from left field and entered into the sector. That will continue as well. As for the some of the things that I think hopefully we've touched on, the negatives and talked around those and talked to those. But as I said, I continue to think that this thesis will grow. It'll be a bumpy ride because it's a small sector, but it should benefit those who are in the sector.
Fantastic way to sum it up there, and so much to look forward to and continue to watch. I really enjoyed this conversation. It was a lot of fun, plenty of gems to unpack there for the viewers. Hopefully it helped you all understand uranium more as well. If you enjoyed it, like, subscribe, turn your bell notifications on. We've just launched the second channel for investors. There'll be a link at the top of the pinned comment, so head over and subscribe there. The companies discussed as well were Alligator Energy, it's ASX AGE, and Lotus Resources, ASX LOT. You can check them out. That's Guy Keller from Tribeca Investments. Welcome. Big thank you, Keith Bowes and Greg Hall as well. That was a pleasure. Thanks for joining us, guys.
Thanks for having me.